Hey, welcome back, everyone. How are you all doing today? So it's another session of our top trade setup, market analysis, and macro data, sentimental data, conversation that we do have every week. So I want you to sit back and enjoy the show. But before we go forward, please, if you are not a member of the channel, please don't forget to subscribe, like, and share with your friends. It goes a long way for the channel. And you can see it's a very new channel. So support any way you can. And the way you can support is by subscribing and sharing with your friends and liking the video. So without further ado, guys, let's jump straight into what we have this week, which is the week I will personally call the Fed's week. Okay, we have the Bank of Canada monetary policy report rate coming on Wednesday. We have the FOMC funds rate coming on the same Wednesday. So we have the Fed in the United States releasing their, interest rate. Possibly they're going to cut interest rate on Wednesday. So, we have to get ready for that. In Canada, they're also planning to cut 25 basis points. All right. And last week I discussed, we have the Fed Waller saying they're gonna cut rate. It has to happen. It's gonna be very slow, but definitely the fund rate cut has to happen this week. Okay. And then Bank of Canada also came out possibly because of the the fallout of the tariff conversation between Canada and the United States, which somehow had finally come back to the table. But I guess Trump said they're gonna just bought out of the conversation. The deal is not dealing again. But then the minister of, I think the foreign minister or the finance minister in Canada kind of said something that surrounds, going back to the table, having a conversation, still continuing with the tariff trade talk. Okay. So, but, the Bank of Canada still want to cut rate because inflation is not looking very good over there. Let's actually take a look at what the Canadian economic heat map look like. Excuse me for this. All right, so there we are on the Canadian economic heat map. You can see they still have a very sticky inflation, I would say. Okay, but let's consider it one after the other. Let's look at the growth first. Okay, let's take a look at the growth first off. We have the GDP growth right here. We have the manufacturing, and then we also have the service, and after that we have the retail sales. And you can see the growth is 0.2%. Yeah. So when you look at the growth data, the GDP growth month to month, or let's just say the growth survey in Canada. All right, we have 0.2% right here, which is the actual, and the data was released, okay, in September 26th. So possibly we're going to be getting another one by the end of the month, okay, maybe if not this week, possibly we have to get it this week, to be honest. So we're going to go back to the calendar to see if we're going to get it now because it is released every month, okay. So that's that aside, when we take a look at the number, okay, you Control Z, we don't want everything deleted like that, so let's just delete the little ones. Let's delete the little one again. Let's give it another shot. Okay. Okay, I think it's fine now. Let's not mess everything up fully. So GDP growth month on month in Canada is at 0.2. When you compare with previous and what was forecasted, it beat it. Okay, it beat the previous by 0.3%, and the forecast it beat it by 0.1%. That was very good for the data immediately. But when you take a look at the impact on the economy, it's still not very good because 0.2% growth cannot be compared with the level of inflation they have in the country. So that means production, or let's just say domestic production in Canada is still not getting to that level of providence. It's not getting to that level of, robustness that can sustain the economy. So they still need to get some things from China, from the United States, from Mexico. All their trade partners have to still put in to survive the month, survive their monthly growth. Okay, and that is why possibly they're going to be running in a deficit. Okay, but that is not the major thing right here. We just want to take a look at why the Fed is possibly cutting rate. So we have the manufacturing PMI, the service PMI, all of them fell below the previous, and as expected again, the domestic production is not that enticing. Okay, they're living more on importation, stuff like that. So I mean, you get the idea now. The retail sales is also not good, negative 0.7%, meaning people there cannot even afford to buy what is being sold over there because it's heavily expensive, heavily taxable. It is crazy. Okay, so and I personally have a friend that always commenting about things are expensive, things are pretty expensive, and stuff like that. So these things are why we have the growth. I'm just going to give the growth maybe 25% because it's not looking very good at all. Okay, in my personal opinion, it's pretty bearish. All right, although it beats previous, but this is negative 0.7. It's still crazy in my personal opinion. So let's just put it that way. I'm just saying in my personal opinion because this is all my personal opinion. All right, and focusing on what we have right here based on the data. So taking a look at the inflationary data now. Okay, the inflationary data looks quite crazy. All right. And why did I say crazy? We have the CPI year on year. This was released in October 21 and 21st and 28th, which was last week. So we got CPI year on year at 2.4%. Although the inflation from 1.9% that they got it and Trump, they got it very cool and corrected. Okay, and stable at 1.9%. Now it jumped and skyrocketed to 2.4%. And last week we saw some strength on the Canadian dollar. We saw some strength on the price of oil. Okay, which was last week, and all of them can be in some way and form they can be attached to this inflationary data. The same thing happened to PPI. Okay, 5.5%. This is heavy. That means things are crazy expensive there. No, I mean there's no reason why this can be also be attached to the reason why retail sales is below normal. Okay, because things are very expensive. People won't be able to afford all these things. It's too expensive. You understand what I'm saying? So, guys, the Feds needs to cut it. Okay, as a matter of fact, they need to cut it to like 1.9%. Okay, if care is not taken, like the ECB did. Okay, they're gonna probably just get into a cutting rate spree in the next couple of weeks. Okay, so Canadian dollar, I think we're gonna spend so much time here, and then that would be that on the Canadian dollar front, in my personal opinion. Okay, so but for now, I would say that the inflationary data is off. The growth data is off. And let's not talk about the labor data. All right. Talking about the labor data, let's just talk about it just for a minute or two. Okay, unemployment rate, 7.1%. Very crazy. Very high. But it beats, it literally beats what was expected. Okay, we expected 7.2%, but it came below it, meaning it is good, but it is still not good. Okay? Canadian economy is very weird. But when we focus on the data at hand, consider it with the previous and the past, okay? I mean, the previous and the forecast. You see, it's on an average of, quite stable. But these actual data are very terrible. Okay, they are pretty much terrible. So that is where we are right now on the Canadian dollar. So back to the economic calendar. Let's come back to the US economic heat map because we're going to discuss one or two over there before we now jump straight into the rest of the show, like we always do. So the dollar, so let's continue with the economic heat map. So moving forward, we have Australia, and we have Australian CPI data coming, okay, just the inflationary data, the whole lot of them, okay, and it's all forecasted to come pretty higher than previous, okay. You can see we are expecting 1.1% for the CPI, quarterly CPI, 3.1% from 3%, which is the previous, for the CPI year on year, and then 0.8% for trimming CPI from what we have previously to be as 0.6%. So we're going to see some very delicate and serious rally on the price of Australian dollar next week, potentially, if all this data come just as forecasted, or maybe slightly higher than what was being forecasted. Okay, so let's pay close attention to all of that, in my opinion. Again, we've talked about the monetary policy, Bank of Canada cutting rate by 25 basis points. The same thing with the Fed, okay, 25 basis points rate cut. I mean, it's well expected. So let's take a look at the US economic heat map real quickly because I don't want to spend much time here today. We have the GDP, totally GDP, and don't forget, last week we got inflation. Okay, we got CPI data. Okay, I mean, it has to happen at this point. And we got a slow-paced inflationary data. It is good for the economy, by the way, but it's not very, very decent for the currency. And last week we saw that, DXY kind of like, it had, at the very beginning of the week, DXY had a very serious momentum to the upside. All right, where is DXY again? Let's take a look at the dollar itself. This is the dollar itself, right there. Okay, you notice that it had a very good momentum to the upside last week. We have Monday, Tuesday, Wednesday, Thursday. No, so that means we have Monday, Tuesday, Wednesday, Thursday, and Friday. And you can see on Monday, it kind of tipped down to retesting this particular zone again, this resistance on support. All right, again. And on Tuesday, it flew up, okay, crazily. Very nice. And then Wednesday, Thursday, Friday, it just flat out. Okay, it was flattened. And why do I say that? You can see we have more like a doji. Okay, both on Wednesday, Thursday, and Friday, right here, dojis. Okay, that is indecision. So when you see candle like this, I mean, you know what that means. What it means is that at this point, anything can happen. Everything is on the table. It can as well bounce to the upside or probably, weaken lower to the downside. So that is what we had on DXY for a good 3 days momentum or a good 3 days candlesticks. Now moving back to the economy, okay, you can see right here, like we always do, the growth data right here still looks very interesting. The inflationary data still looks quite decent. And the wage and the labor, or let's just say the labor data looks very, very weird still. Okay, so let's take it one after the other. The good data, 3.8%, brilliant. Manufacturing PMI, quite cool. Service PMI, interesting. Retail sales 0.6, very good. So I'm going to give growth around 55%, 55% to 60%. In my personal opinion, as well, I'm going to give it 60%. Okay, let's give it 60%. It deserves it. Okay, let's give it 60%. That is for the growth. Okay, and then inflationary data is still pretty sticky. CPI 3.0, we have PPI at 2.6, and we have PCI at 2.9. And on average, I will give it, let's just say 55%. Okay, inflation is still pretty good. Okay, still pretty good. However, when we take a look at the wage growth, no changes. Okay, what was forecasted is what was released in September. And don't forget, we've not really gotten any labor data for this month because of the continuous government shutdown. Let's not forget that. So we're still pretty stuck. We're pretty much flying blind on that aspect of the economy. Okay, or let's just say economic data. All right. Unemployment rate 4.3%, average, pretty cool. Initial jobless claim was, initial jobless claim came down the last time we got that. Okay. Jobs also possibly went up. That means people can't. There were some job openings, in some companies that people were able to fill in. People got new jobs. Okay, so that was very good. ADP and NFP that was released last month, literally, they were not looking very good. So on an average, I would also give it 55%. All right. So when it comes to the currency, it's on an average of 50%, and the economy is 70%. And that's why we saw Nasdaq, even with the US tech company weakness, the sentiment that's around the US tech, you see some very good rally this week on Nasdaq, Dow Jones, and the S&P 500, and they were all looking very good. And you can see the economy is also not looking very bad. Although by the time they drop the PPI, PCE, retail sales, the service manufacturing PMIs, and all of the labor data, by the time everything gets dropped on our lap, probably at the same time, at the same day, at the same hour, you're going to see some crazy move in the market. I hope that doesn't happen. I hope they give them one week, 1 week, interval, so we can really wrap our head around it, wrap our mind around it, get ourselves prepared for the undeniable drama that will happen in the market when all this data is being released. Because you can bet that market is going to go viral, going to go crazy when this data is getting released or eventually got released. So this is where we are on the economy, in my personal opinion. On Thursday, we have the tentative, again, just tentative in Bank of Canada. Definitely, they are still holding off on cutting rates, despite the fact that the Japanese yen basket is crashing right under their nose. You can see right here. And Japanese yen, it is technically crashing right under their nose. Nothing looks super good on that one. Okay, considerably, it is approaching $5. Okay, it's approaching 5,300 region right now. So it is not looking very good. I was hoping that this particular region will hold off, but now it seems like it's gonna fall off down to 5,300 from the which is July support. No, July 2024 demand zone, kind of form a sort of demand right here. So let's see if it's gonna come back down here. And we're going to see the pair like CAD yen, pound yen, euro yen, Swiss yen, all of them will fly to the upside, especially Swiss yen. Swiss yen is going to make some crazy move. So get ready for that. I'm just expecting a pullback on Swiss yen. I really want to buy that one. So let's watch out for that moving forward. Another thing right here is after the yen inflation, interest rate data, we have ECB main refinancing rate on Thursday as well. ECB is leaving their rate untouched, which is well expected of them because they've actually cut more than normal this week. So that's very fair. I got out the speech this week, last week, excuse me, but I did not really have time to listen to it. So probably I will catch up on it. I really didn't catch up. That was very bad of me. As a macroeconomics trader, I should have caught up with that, but I really did not. So let's get ready for that. I will catch up. You should also read it, whatever she said, and we see how that goes. And I think that's more like it. We had core PCE in the United States. Core PCE is coming this week. I guess that's fair. But it's 0.2. This is not the actual PCE. This core PCE price index, not our PCE, just the solve it. So let's watch out for that. Employment cost index as well coming. It's also tentative. It might never get released. Don't forget, the shutdown is still very, very much active. So prepare yourself. And then Canadian dollar. I said CAD GDP will be coming this month. Okay. And right there, we're expecting it to be the same, 0.2%. No increment, no decrement. Now, if we get a higher number here, that would be very good for the Canadian dollar. If we get a lower number than what was being forecasted, which is still previous anyways, it's going to be very bad for the Canadian dollar. So watch out for that. It's very important. This week is going to be very, very hot. We have Japanese yen interest rate, the ECB, the Canadian dollar, and then the United States dollar. They are all coming this week. So get ready. I mean, you cannot be too ready for all this data this week. You cannot be too prepared or too ready. So watch out for everything. And lastly, we have the economic surprise model right here. United States dollar 50%, averagely decent. Pound is pretty strong. Euro is pretty weak. Yen is pretty strong. Yen is pretty strong, but it's weak. Technically, it's terrible. Okay, Kiwi is average. CAD is pretty strong. Aussie average. Sweet, gaining some strength. Short fire. Right. So we should watch out for that, anyways. So that's what I did. I really, really don't fancy any of this. I'm just gonna stick to technicals for now until we have an actual data in the United States economy. Then probably I will consider, running back to whatnot. But for now, I will just stick to my indices. I have a couple of indices or assets I'm holding. I have Dow that I'm holding. I have Nikkei. I'm buying Nikkei, and then that's more like it. Okay, and then I'm selling Eurogbo. I'm selling WTI, also US oil. Okay, so these are the 4 positions I have open scattered everywhere, or across all my different accounts. So let's jump straight to the chart. Okay, I think it's about time we do that, so we don't really spend too much time. We've discussed DXY, but let's go back to DXY just to wrap everything up over there. Okay, right here on DXY, you will see that it is exactly what we anticipated for last week that eventually happened. I said if we get it close above this particular last upper week Thursday candle, which is bearish, then we had a shot at reaching 100 region right here. And then when I said that, why I didn't factor into the whole concept, or at the time I didn't factor into it, is that the CPI is going to get released. And then when the CPI got out, it was pretty weak, okay, for the currency, but very good for the economy. And with the old sentiments that's around the dollar right now, we have the Chinese company, or let's just say the Chinese entirely kind of like dump around $51 trillion. Okay, $51 trillion of their dollar holding. I don't really get the full gist about that, but I'm going to attach the picture so you can also do your own research, okay? I'm always up for do your own research, go ahead, read the report, understand what they're talking about. Don't take my word for anything. Okay, go ahead and do your own research all the time. Okay. As a matter of fact, whatever you read online, go ahead, do your own deeper research, okay, or deeper research, and make your own decision, because we're dealing with money here. Every mistake you made, you get charged from your capital. Okay, so you don't want to leave anything to chance. Okay. Now going back, so we had the Chinese people literally selling off their dollar holdings and replacing it with gold. Okay, so that is something we should pay close attention to. And some other BRICS countries are also doing the same. We have Russia, we have China, we have Brazil, we have a few other ones that are also like embarking on the same thing. So they all believe that dollar strength is, it got to be stopped somehow. And believe you me, dollar will deteriorate, but it's not going to happen in a day. Okay, it's going to deteriorate slowly. Okay, the kind of leverage the dollar has on the world trade, on the global economy, is going to reduce. But it's not going to just fade away like that. It's not going to just one day just eradicate it and one currency just erupted and I'm here to take control. Now it's not going to happen like that. Okay, what will probably happen is, what we are seeing right now, dollar will slowly lose control due to, excessive spending in the United States, due to, government, getting into crazy things that they're not supposed to do, mismanagement of funds, really taxing the citizens, all these things that we're seeing happening. It's the pedestal to a global shift, or let's just say the world order, so to speak. So it's happening. Let's prepare for it. It's inevitable now. And we're also hearing that the US is planning to transcend their entire debt of 38 trillion. Okay, they're also trying to transcend it into the crypto space. It's going to turn to a stable coin. I mean, the world is just fun sometimes. Everybody is just doing whatever they like. Okay, I'm very sorry for just playing around. But if you really think about it, it's just very weird. Everybody's doing whatever comes to their mind. Whatever they like, they just do it. Regardless of the outcome. It's just very horrible anyways. But anyways, let's just come back to DXY. So dollar index, I'm still like very actively targeting 100 region. Now, after 100, I genuinely don't know what next. I don't think we're going to get it all the way to 150 or 105 anymore. I'm not sure. I think what will probably happen is we're going to get a very slow pace momentum to 100 based on the main refinancing rate that we're releasing this week. And we also have the PCA price index. We also have the, I think the retail sales price index or something like that. So when all of that is released, if it actually looks very good for the dollar, the sentiment that surrounds the main refinancing rate also has a very big role to play here, even though they're going to cut rate. But the sentiment is this good for the economy or is this bad for the economy? In my personal opinion, I would say it's pretty good for the economy because the rate cut has already been priced in. So if you get 25 basis point rate cut, we're just gonna be market is just gonna shake a little bit and then it will do whatever it wants to do, probably go up. All right. So just watch out. And you can see the flattening that we got on Wednesday and Thursday. I mean, that is a very wild. Don't forget, this is a daily time frame, guys. Okay, that's a very wild candle right there. Just dojis. Okay, Thursday doji and Friday doji. It is terrible, and we're getting that from the almighty dollar. And that is another thing, another testament to the shutdown that we're experiencing right now in the United States. So just kindly watch out. Okay, what you want to do now is to kindly watch out. At this point, anything and everything is on the table. But again, in my personal opinion, I believe we can still get the market, the dollar index back to 100 region. And after that, possibly we're going to get another drop, probably to 96 or considerably maybe to 95. And maybe this range will just continue forever and ever to the end of time. You know what I'm saying? So just watch out for that. Wherever the best case scenario will be to see the dollar, just to pivot to the upside around that 105 region with the supply around here. But I'm not sure about that for now. But that's just that. And the worst case scenario will be dollar will just torpedo back down all the way from the top here. Okay, that would be the worst case scenario. But the average case scenario would be for dollar to just slowly approach 100, and then from there you get a drop to the downside moving forward. But let's just watch out very closely. This week we're probably gonna get this, or gonna get this week, in my personal opinion. So all this torpedo to the upside or crashing down is probably gonna be for November, December, thereabout, based on what the economy looks like. And if the Feds or the United States government finally open their shop again and we are getting the data. If we are still not getting data, we're probably gonna be getting this doji forever and ever like that. We're just gonna get a flattened momentum, flattened momentum like that. So it's just gonna be very weird now from there. So watch out for the dollar index. Now getting back to my open position, Eurogbo, I've been buying these, shorting it. Okay, I bought here, bought here, bought here, bought here. I closed everything at the top there. Okay, it's a very crazy range of like 3 weeks, in my opinion, in my personal opinion. So that's weird. Although I've been selling every top, okay, I've been selling every top as well, taking every profit at the bottom. But right now I'm holding a short position. Why am I doing that? Because when you take a look at this particular asset on a more larger frame, you will see that it's a very wide range pair. Okay, it's not going anywhere. Okay, it's not going to the top here, and we have ECB cutting rate next week, so that is already going to be messy for Eurogbo. Okay, it's not coming here anytime soon. So if you break above here, I will still sell. All right, above here, I will still sell. It's a very low momentum kind of pair, so nothing actually kind of scare me on this particular pair. It's very slow, very dramatic. And another thing is, it has the same momentum when it's flying and when it's dropping. And that's another interesting thing about it. When it drops fast. When it rises faster. Okay, I mean, the dropping and the rising is always very fast, right? Up, down, up, down, up, down. So this is a pair that, if you're a day trader, this is something you really want to mess around with a lot. Okay, you just want to tap into that range and just trade it, and till your heart is full, in my opinion, though. But do what works for you. Comfortable. Don't take my word for it again, because it's a very risky position. But what I'm gonna say is that I'm DCAing this one. Dollar cost averaging, that's what I'm doing with the pair. Just add all to the position. And once it comes down here, I'll make good money, and then probably I'll just bought out of it altogether. So USD card, I took a buy last week on USD card, but because of the weakness that came eventually on Friday, this one actually come down. I was able to get out at break even because I'm still not sure about it yet. Why? Because I want a bigger drop to this particular region right here. Okay, sometimes my hand and my mouth are very weird. So on the USD card, I will still consider a move to the downside here, back to 50% Fibonacci. Then maybe we're gonna move up faster there. And now that's based on what happens to the United States dollar. Don't forget, we have a very strong Canadian dollar right now, based on what we've seen. Although the economy is not good, the data are not good, but the actual data that we've gotten, when you compare with previous, is quite decent. So it's a very tricky thing to do right now. Just watch out for Canadian dollar. But largely, I'm still very bullish on the card because, I mean, look at the momentum. We have a very strong momentum right here. High, low, high, low, high, low, high, low, bam, bam, bam. Another high. We're going to get a new low right there, and then maybe another new high to the upside. Okay, so we have a momentum. We have a trend right here. You can see all the highs. You can see all the lows. You can see the highs. Okay, so maybe we're going to get maybe a slight range right here that will lead to another bullish momentum on USD card. I mean, it is right there in our face. Although you will see that something is very common on this particular pair. We always have multiple bottom before the next rally, and then after the rally, we have multiple bottom again. Then we get a rally. So I mean, it is just very normal we get another multiple bottom right here, and then we get the new rally to the upside. I won't get that past it. Okay, I won't get that past it. So that's very normal. That's very decent. So you have to approach each pair based on their personality, based on their momentum. You can't impose a momentum on the gold asset and put it on USD card. You're gonna mess things up. Okay, this is how this one want to approach. This one want to get its momentum, its movement. You have to give it that grace to do its things. You pick a trade, you manage it very well, and possibly you make money from it. As far as silver is concerned, I took a buy on silver, which I kind of like not comfortable with right now. Okay, took a buy, close it, took a buy, close it. I've been like my motion has been everywhere on the road because gold and silver. You can see right here. Why I took this buy. Now, by the time you can see, this is Wednesday, Thursday, Friday. Okay, market dropped on Thursday. I mean on Tuesday, excuse me. This is Monday. But last week Friday we got a drop. On Monday we traced a little bit, probably trapped buyers at the top here, thinking, yeah, let's go again. But then the market dropped crazily on Tuesday, and Wednesday, Thursday, Friday it just flattened. Okay, flattened out. So although I've been day trading, the 5 minute time frame has been very fun. I'm gonna say that. But overall, I would say that I'm still largely bullish on this one. I get a break above there, pull back. I'll probably add some positions to this one and then see how we can get it to $57.50 per ounce moving forward on silver. But for now, I'm still largely comfortable with the position I have. It's a very short, small position. But moving forward, we see how that goes in the next couple of days. All right. US 30 on the other hand, I'm still holding my buy on this one. Very good, very nice. The only issue with my US 30 is that it is a very small positions. Okay, I wish I actually added more entries to this one. Like I use a bigger lot size. I actually use a bigger lot size, and I have to close it in some of my accounts, like reduce the lot sizes, because I was expecting this bearish candle to give another bearish candle print back to this place where I will now add another trade. If you check my trade, I have multiple buy limits orders. Okay, I was waiting with different lot sizes, but as the market will have it, this is a good money, I would say, but it's not that much good money in my opinion. I don't like it. Okay, I don't like this good money. I want a better one at the bottom here, so I can buy with it. But it is what it is, right? So moving forward, the same thing on EK. Okay, EK was a very better one, but I had another buy entry at the bottom here, in my opinion, which would have been a much better place. We have this break and retest earlier, up, down, which I took a buy there. I was expecting it to just go like this, come down here, and maybe I will buy again, or even come down here and I'll buy again. But then none of that happened. The only thing that did happen was this up, down, cover this gap, and then the movement continues to the upside. It's very fun, by the way. But then, sometimes you just wish that you could have taken some out, right? So that's that. WTI, I told you I bought, then I sold. Now I'm selling again. So I bought from the bottom here. I'm very sure we discussed it last week. So I bought from the bottom here. It rallied higher because the Chinese company, the largest Chinese oil company, said they are also going to support the United States sanction on Russia oil. So that was very fair. I don't think it's fair to Russia because, China is a big friend. They are big friends. So I'm very sure there's some backdoors, conversation that happened before they released that statement. So I don't really want to get into the politics of that. But overall, we got that demand. We just went up crazily. When you have news like that, it's just very normal that it's gonna demand we sprout, demand will go crazy. So that happened, and I just started shorting again. So let me delete that. I just started shorting again. I think some of my entries. I took multiple entries on this one, anyways. So I took some entries right there. Okay. So I started selling on Thursday, by the way. So you can see this momentum, right? The market has been selling for a really long time. Like it has been bearish for a really long time. These are the highs that we have. These are the lower highs. All right, lower highs right there. So maybe we're gonna get it back down here because I'm still largely bullish on this one, and then maybe up, down, and up. I'll buy that one right there. But for now, I'm just short selling. It might be a short sell, and it might be a large long-term short because there's still a chance that US oil can drop all the way down to 50 region right here. Okay, like 50 region, somewhere around here, somewhere around these demand zones right here, possibly. But is it clear yet? Nothing is clear for now, but there's a possibility right there. So, but however, my target is right here for now and right below here for now. Okay, nothing is certain. You can even see I have a couple of alerts so I can start managing the trade. All right. The moment I'm in a profit, a decent profit, or maybe 0.5%, I will put my stop loss at break even. Period. And whatever happens can happen moving forward on WTI. So let's watch out. And also, there's a possibility of this happening next week. All right. So watch out for that in WTI as well. So on that note, let's jump straight to our trade recommendation and how we can better prepare ourselves come next week. On Eurocard, on H-Finder, we have Eurocard as bearish, right? Yeah, right here, Eurocard bearish. Seems to be the only pair that is bearish. So I would say a break below here, a pullback to be testing this particular demand zone right here will give us a very good chance to target this particular, the lower bound of this channel, or maybe a further down to the downside right here, back to this particular demand zone, or maybe right here, or maybe right here. Okay, we have some regions that we can target on Eurocard moving forward. So watch out. But for now, the first thing you want to focus on is the break below here, a pullback, okay, which will make this kind of like make more sense to to trade. We have this is something we can kind of like just call high, low. We have high, we have low, we have high, we have low, we have high, then we have another low, or maybe below here right here. Okay, so just watch out for Eurocard right there for a short. And if you really want to play the buy, you can just buy from there. I mean, it's very, very possible as well. So, but for now, I would probably consider the shorting, the sell part of it, because CAD is again pretty decently strong, and Euro is pretty decently weak right now. So watch out. Other one is Pound Aussie. I'm pretty bullish on Pound Aussie. I actually took some buys, okay, last week. I got me tapped out around here. So now, if it comes back down to this particular demand zone again, I would consider buying, Pound Aussie again, all the way to this particular supply zone. All right, so I'm just watching out for demands buy. I don't want to buy at the middle of this range because the range band. You can see the range is saying it's March last year. No, it is March this year. Okay, March 2025. It's been in a very, very conservative state. So I don't like playing inside the range. But sometimes, some money can come out of the range, especially if the range is very wide and you have a bullish sentiment on the pair itself. So I kind of like play in that zone again. So let's just watch out for Pound Aussie. You might take a very big buy right at the bottom here, and then go to 1 hour time frame and see if you can get an entry from the candlestick pattern, and you're good to go on Pound Aussie. Mr. Gold, Mr. Gold, Mr. Gold. What do we have on Mr. Gold this week? I think gold has more possibility of dropping down to 3960. Then we'll get it bullish momentum. Okay, I mean a bullish rally from there. I mean something like this. We can expect something like this from gold, and then maybe the continuation will resume. But I want to see a pattern on the 4 hour time frame, or maybe 1 hour time frame before I take my buy on gold. And if that fails to happen, maybe we're gonna get something like this. Okay, back to this particular region, which is 3800, and then we get the rally to the upside. Okay, something like change of character right here, and then we take a buy here or take a buy here, something like that on gold is very possible. So watch out for gold. I'm still largely bullish on gold. I'm not sure if the pullback is going to come back down here, 300. I'm not sure. All right, but again, as time goes on, I will sell every little chance I get. I will short sell, excuse me, and I will buy every little chance I get. So just watch out and stay protected at all costs. Good. NZD dollar, I'm largely bearish on this one for a while or for now, and then I'll be buying later. As far as I'm concerned, I think there's a possibility that we're going to get dollar Kiwi back to retesting this, this bearish channel. Okay, some time ago I took a buy here, we got this profit, and I think I took another buy that didn't play out very well. But then it came all the way back down here, and I took another short right here, made some profit last week or so. So now maybe we're going to get a continuation of that. We're going to get a continuation of that this coming week, back to retesting this bearish or the lower band of this channel. So just watch out for that as well. Euro USD, Euro dollar is averagely weird, but it's slightly bullish in my opinion. So I would say that a retest of this demand again would play a very big role here. Okay, all the way to the upside. Although there's a little drama here on the 4 hour time frame, we have a little demand around there, and also on the 4 hour time frame we have a serious demand here. Okay, so maybe the market can come back down here, break up, pull back, and then we get it back, or maybe a deeper momentum to the downside, a deeper dip. Yeah, a deeper dip can be expected on euro dollar, and look for change of character or a price pattern, and then move on to the upside and target 1.9 blah 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 moving forward. All right, so that's that on euro dollar. USD CHF, again we have a very good opportunity to buy because of the strength, that 100 target on euro on DXY. Okay, so watch out for that. Maybe, just maybe, you can see we are getting this particular demand zone. We tested multiple times at 0.7830. Okay, multiple times now, 1, 2, 3. Okay, so a break above there, pull back on USD CHF, you can get another rally to the upside again. Okay, so watch out for dollar Swede. Although Swede is not budging right now, Swede is awfully strong. Why? Because of the inconsistency in yen and inconsistency in gold in dollar. So people are putting their money in Swedes and gold right now, and then crypto as well. You can see crypto is also quite inconsistent. It's been pumping up and down. So I mean, people and investors need to put money somewhere. So they're going to find a way to put the money, and any way possible, the money is going to get kept. So just watch out for that. Moving forward, but personally, I would say a bullish rally is considerable. Okay, it can be considered this week. So just watch out for that. A break, a pullback, and then continuation to the upside. All right. I mean, betting on this particular demand zone, holding up. Okay, holding the price very steady. All right. So that's that on this CHF. Let's talk about Bitcoin, then I'll wrap it up today. So Bitcoin. So what do we have on Bitcoin? Personally, I want to buy Bitcoin right at the bottom here at 100K. But you can see we have a what's it called again? An early rally on DXY on Bitcoin. So I'm not sure if it's just about to retest this 116K region just for it to come back down. All right, based on what I draw right here, or maybe it's going to continue to the upside. Okay, I would like to see how that goes. I'm still targeting 140K as the next bull run. Okay, target for the next bull run, anyways. But personally, I want to buy at a more cheaper rate, which is at 100K right here, then get it all the way to the upside. And for adventure, if 100K get broken, then we're approaching 75K. Okay, it is Yeah, it is there. Okay, I was actively trading Bitcoin when it was 75K last year. I mean, we can see something like that again. So just watch out very closely. Okay, watch out, watch out, watch out. But for me, rally to the upside at 116K and we sell it off back based on this particular demand right here, particular supply right here, and then we buy again from this demand zone at 100K. So that is where I stand right there. I have so much to share with you, but I have to go to church, guys. So I'll see you in the next one. Have a beautiful day. Bye for now.